Hi guys, thanks for tuning in to another episode of Nuggets News. Well, today I want to share with you my 2020 predictions for world markets on the whole, and I'm going to do dedicated videos about gold and silver, as well as Bitcoin and the cryptocurrency industry. So this is more about money flows around the world, how the global economy is going to play out with what's happening with monetary policy in specific regions. So I guess the last decade itself has been the decade of QE and money printing, and that's worked out pretty well if you were in all those assets. So despite maybe valuations and fundamentals going out that we know, which I've spoken about a lot, as long as central banks have been adding liquidity and printing that money, well, it's just gone into assets, particularly as yields have gone lower. So you can't get a good interest rate in your savings account or anywhere really with these negative yielding bonds. So why not go into stocks, anything that's offering a yield? And we've even seen a junk bond bubble, and I'm going to talk about that as well. So the liquidity issue itself is probably a topic worth discussing. When all the money has been flooding into these things, it's the old one side of the boat, which you hear me talk about as well. So all these investors are just going to these passive, investment ETFs, funds, whatever it is, because everyone is just happy that things are going to keep going up in price, particularly with bonds. The thought process is, well, even if a bond has a negative yield, a central bank's going to come along and buy it off me when they start printing money and ramping that up again. They're going to pay more than what I paid for it. And I did a dedicated video about negative yielding bonds, so please check that out if you haven't already. In terms of that liquidity though, when the tide turns, what if central banks try something different this time? Modern monetary theory, maybe we see people's QE, some more fiscal stimulus from governments. If it doesn't work out the way that everyone is thinking, and that is that rates are going to be low forever and that central banks or someone else is going to come along and always buy that bond off me for more than what I paid for it. If that all changes, then people move very quickly from one side of the boat running to the exits. And I don't think there's going to be enough liquidity there. There's not going to be any buyers all of a sudden when everyone has been a buyer and now everyone becomes a seller. So that liquidity issue on itself is a bit of a worry. I've done videos about the high frequency trading and the bots and how they sort of, they take a step back or even turn off when things get too messy, and the market's just kind of left to free fall there as well. In terms of central banks, we have seen a few central banks try to raise interest rates, but on the whole, most of them are back in easing policy now. We've seen the Fed say this is not QE, but obviously they're having to plug all the liquidity holes with more money to the tunes of hundreds of billions of dollars. And I think that is just the start. I really think that by the end of 2020 and beyond, we're going to have to see stimulus to the tune of trillions of dollars. Remember, there's trillions of negative yielding debt. And if everyone races for those exits, someone has to step in and plug those holes. And the banks have really got the central banks in a corner because they just say, oh, there's no liquidity. We can't even shore up our books overnight with the repo market. We need more money or the financial system's going to freeze. So they've really got the advantage here. They've got this strong hand. And this is what I spoke about in 2018 and 2019, that standoff between banks and central banks, and they really have played their hand so well, and they just know that they're going to get money and they're not going to let the system fail. So they're going to keep buying back their shares, keep lining their pockets, and wealth inequality looks like it's going to continue for the foreseeable future. So I know people want me to say that the stock market's going to crash and that title would get more views, but at the moment they're just going to keep printing money. And look what happened in Japan. The Bank of Japan, the central bank, now own the majority of stocks and ETFs, and they've bought every bond that they issue. So as more and more people retire, and this is the big 3 Ds that people are talking about: debt, demographics, and deflation. So as those retirees, wind down their lives and their spending, that can be deflationary with prices going down because they're spending less. We're not consuming as much as we used to. So with those demographics, everyone's selling their shares, the baby boomers that have accumulated all this wealth, whether it be property, or shares or bonds. Again, they're going from everyone on the one side of the boat to people finally starting to sell their assets into the market. And are there going to be those buys? Is there the liquidity? I just don't think that this necessarily ends that well. In terms of US dollars, I've spoken about this a lot, how strong the US dollar has got. Once again, people love the titles saying the US dollar is going to implode because they've got 20 trillion in debt and 100 trillion in unfunded liabilities. Yes, that is a major issue long term, and it probably leads to some sort of inflation. It's very good for Bitcoin, gold, and those other assets. But for the time being, emerging markets and all countries around the world, they're forced to go into US dollars for world trade. And even when they sell their assets in a sell-off, in a market sell-off, you're selling into US dollars. So there's always that buy pressure putting a bid under the market supporting the US dollar, because everyone has to pay down their debt. So if you owe someone a lot of gold, you've got to get gold. Basically, the world owes the US a lot of US dollars, so they've continually got to try and get US dollars, and that's why I've seen the US dollar get so strong. So yes, we're seeing a lot of moves from the BRICS nations, Russia, and these people talking about building their own alternate payment systems. So we know that is gradually happening, the move away to a crypto-based system, a gold-backed system, or just their own payment system. The US dollar is going to lose market share, and that's going to continue all throughout this decade. Next thing I want to talk about is consumerism. So what debt allows you to do is borrow from the future. And I'm going to have my grandpa on soon to talk about how they used to save money, and you can even afford to save for a couple of years and just buy a house. Whereas these days, you've got your student loan, you've got your car loan on top of an enormous mortgage where people are putting 30, 40, 50% of their wage just into a house. And all of a sudden you've got to put your couch on a credit card, then you're putting your food on a credit card to tie you over, your health insurance. So it's just so expensive. We're borrowing from the future, and you see this reflected in the household debt levels. And at some stage, that has to be paid back. And we've seen it in Australia, we've seen it worldwide. As central banks have dropped interest rates thinking that people will spend money because they don't get any reward having their money in a bank account, it's had the opposite effect. People are saying, well, I'm actually getting less in interest, particularly retirees. I need to save every dollar I can. And those people that are trying to pay down their debts because they sense that times are tough. When we had that correction in Australia in the housing market, despite everything they did, a lot of people use those tax cuts to pay down debt rather than spend it. So times are changing in terms of consumerism. A lot of that is driven by social media. We've seen the big tech giants being dragged in front of Congress. People are starting to ask questions about, well, what was the price of me giving them all my data unbeknowingly? Was that legal? We've seen Europe crack down. I definitely think that is a big theme going forward. People realizing the cost of not having any privacy online, and that ties into the central bank issued cryptocurrencies where they're going to monitor and surveil everything you do. So on your phone, they know everything you're searching, where you are, they're tracking you, your microphone, your camera. That stuff's no longer conspiracy theory, it's just fact. And now they want to monitor everything you spend money on as well, because look, that information can be sold to companies, it can be used to monitor and surveil you. And it really worries me how 90% of people, I'm sure your friends and family, are pretty oblivious to this stuff when you try to talk to them about it. So a lot of companies have survived because of these low interest rates, and a lot of the tech boom has come from these just promises of great ideas and huge valuations. And we've seen that the WeWorks of the world, Beyond Meats, they've really come crashing back down to reality after these enormous valuations. So a lot of companies are these zombie companies where they're not making any money. They can only survive with low interest rates because they can keep borrowing cash. We're seeing even companies in Australia talking about we need to borrow more money and raise capital to pay out a dividend. So it's just this upside down world of, it's a party for all, the champagne's flowing, keep borrowing money, let's pay it out, let's pump our share price. None of that is going into constructive investment, innovation, and sort of paving the way for the future. So these zombies, these companies that have been kept on life support by low interest rates, if at any point interest rates go up, this party comes to an end. But these zombie companies also prevent people from getting jobs in productive industries and businesses going bust in part of the normal business cycle. And then they move on to another job or get another skill. So instead, they're trapped in this unproductive labor at the moment as well. So zombie companies, that they often issue these junk bonds, this all ties together. Now, with negative interest rates, we saw them spike to around 17 trillion. That's pulled right back to around 10 trillion now. Obviously, that's, I believe, largely the cause why gold and Bitcoin sort of had their corrections. Now we're waiting to see if that's going to pick up again, or the global thought process now is that rates are going to be lower for longer. near zero or negative forever. It's very difficult to get any form of inflation, and central banks are now talking about letting inflation run hot. Now, a lot of their measures are actually ticking along at 1 or 2% just because they can't quite get maybe GDP growth to that target band that they talk about. They're trying all these other things to get inflation, and there's some fantastic talks out there. Stan Druckenmiller, Ray Dalio. We're so lucky all the educational content we have access to, and obviously I try and distill all that down to you guys with the content I make to save you time, and with all the posts we do, particularly in our premium members group as well. So in terms of that negative yielding debt, think about that risk curve that I spoke about in that negative bond video. If you can get 3% on a government bond or 6% on a junk bond, you're probably just going to stick with the 3% because it's far, far safer than why risk that extra amount because a junk bond is likely to default or not get paid out in full. Whereas when rates drop to 1% or 0 or even negative, all of a sudden negative versus a 4%, that's looking infinitely better. And that's why these risk models don't work for a lot of these investment funds. So this enormous amount of money that's flooded into these double B bonds or these junk bonds, if we get inflation and these companies start to go broke and they can't make their payments, we've seen this in China recently. If that debt gets downgraded from double B into junk, these funds, they're not allowed to hold junk debt. And again, everyone's on one side of the boat. The market gets flooded with sell orders. There's no buyers. A lot of these passive funds, these ETFs, they come crashing down. And this isn't conspiracy. We saw it in the volatility market last year. Everyone was just shorting the volatility ETF. I believe it was an inverse ETF or a leveraged ETF. And as soon as we actually got a spike in volatility, you didn't make money if you were right. They just said, oh, sorry, everyone was betting the other way. We're going to have to shut down. Bad luck. So this is why things like holding real precious metals instead of ETFs and not knowing what you're exposed to, use them for trading, but just being aware that this is how the market works and the liquidity may not be there when you need it. One of the things that central banks told us was that when they were unwinding their balance sheet and returning back to normal and raising interest rates, that they were on a set path. It's going to be very boring. The exact quote was like watching paint dry. Now, how quickly did they backflip when markets again tanked? As I spoke about before, it's that battle, that standoff, and guess who got their way? The banks and Wall Street. So central banks did the backflip. They've got them where they wanted. It's not like watching paint dry at all. It was nearly the biggest thing we've seen since the global financial crisis when they had those huge bailouts in hundreds of billions of dollars. Well, now we've got the repo market getting plugged with hundreds of billions of dollars, and they're saying nothing to see here. It is just crazy that they're trying to play this down, and I think it's going to continue to grow. The Fed's balance sheet will make new all-time highs. That's going to be headlines. It's going to be very, very good for gold, silver, Bitcoin, a lot of other assets. And if they try to print money, don't be surprised if we see a bigger bubble in stocks, housing, even bonds. If they promise to buy bonds, what are you going to do? You're going to buy bonds, but that doesn't end well. This is really an upside-down reality, and that is not a good investing strategy longer term. So modern monetary theory has now been spoken about. Are they going to go down that path and just let governments spend, frivolously? Are we going to see people's QE, where the people demand that money that's being printed rather than it going to the banks? Things like universal basic income are now being spoken about. But you have to remember that if that money actually gets given straight to the people, that can cause inflation. One of the reasons we haven't seen a pickup in inflation is because all the money has only gone to the wealthy. So it leads to inequality. The money stays in the banks or the stock market or the assets that only a small percentage own. Or even if baby boomers own it in their retirement funds, it's all just on paper. They haven't actually drawn down on that yet and realized the value. So none of these values are actually a good gauge of what's happening in reality. And that's what I think we're going to see. The rubber hit the road, as I like to say. People are going to find out that everything they think they're worth and everything they think they own, there's not a buyer at that price, at least anyway. So if we do get that money injected into the economy, that's when we can risk inflation, and that is central bank's worst nightmare. Imagine if your credit card payments went up 5%, your mortgage went up 5%, and they've got no choice. If inflation gets rampant, central banks have to increase those rates to try and stop inflation going out of control. But then all of a sudden you're behind on your mortgage, your credit card, your auto loan, and we're already seeing those delinquencies creep up in the US, where the consumer is pretty strong, let alone in these other countries that have a lot of their own issues as well. So despite us being told that unemployment is near record lows, look, I think that those measures are fudged. I've done videos about that, but it's that underemployment where people that are working a few hours here or there, they're getting underpaid, they want more work, it's not satisfying, and then we've obviously got automation, these other things to deal with longer term as well. So you guys know what I think. We really need to make our economy more efficient if we're going to continue to increase our population and just try to keep growing our way out of this. Growing and printing money doesn't work if you don't have an efficient economy that's improving and innovating, all those type of things. So one of the things we've noticed this year, and we did predict this as well, was that inequality in the protests. So, we've seen the yellow vests, but now it's, Chile, Hong Kong, one country after another. In Australia, we've started to see it around climate protests. I'm surprised we didn't see more around the Royal Commission, everything that happened with Westpac and that money laundering. So people are unhappy. They can now get their information from YouTube and other alternate sources. We know they're turning the TV off. Thanks to everyone that does tell their friends and family to check out Nugget's news videos, and hopefully this is one of those that you can share to get them up to speed with everything that is happening around them as well. So whether or not you do believe in, the climate change, climate debate, the green investing thesis, and just making a move to renewable energy, you have to realize that this is something that's happening. So it's a generational shift, a philosophical shift. There's a different demographic of people, and this is what they believe. And we've already seen funds and governments investing in, that green ethical thesis. So the Australian government actually had some of their bonds being sold by other countries because they don't like the emphasis we've got on coal at the moment. So these things are just reality, whether or not you agree with them. So you need to think about that in your investing thesis and your portfolio. So many people have no idea what they're invested in their super and their retirement fund. Take charge of that. If you can do your own self-managed super, I would encourage you to do that as well. So I'm not going to talk about gold and Bitcoin too much. I've got dedicated videos coming out on all that. But just remember the debt demographics and deflation. I think we're going to see a tax on cryptocurrencies, maybe even gold and silver as well, because they are such a good alternative and they're now becoming a threat to the system. What are the governments and central banks doing? They're issuing their own. But people are going to realize that that is the wolf in sheep's clothing, like always, and it has none of the same fundamentals as Bitcoin or gold or truly decentralized assets that you can have in your own custody. In terms of the best and worst economies, don't be surprised if Australia holds up reasonably well. We have to remember that our government debt is pretty low. The government are talking about running this surplus. Yes, we've had the bushfires recently. Maybe that leads to a lot of construction to rebuild those affected areas. And that's normally sort of a net negative and comes out flat. Either way, I think the countries with the most debt, particularly those emerging markets where their currency is losing value and they're owing more and more relative in what they owe in terms of US dollars, they risk hyperinflation. We've seen that list of 20 or 30 countries with inflation just picking up and up and up, and people are turning to Bitcoin on local Bitcoins or gold or silver, whatever it is. But that inflation, the currency wars, as the US dollar continues to get stronger, we're seeing the Bank of England and Europe say, look, we need to do something different. The US has got too many advantages. That ties into a whole nother conversation about the petrodollar and what the US is doing in the Middle East. The Energy Wars, one of my favorite books over my shoulder there, is all about the Cold War there by Marin Katusa. So guys, please get educated, share this with friends and family. If you want daily updates, join our members group, head over to nuggetsnews.com.au. Otherwise, let me know in the comments below what you think is going to unfold for economies in 2020. Do you think we are finally going to get inflation and that is going to catch people by surprise? Or do you think central banks and governments are just going to get out those money printers and try and stimulate as much as they can, and it is going to result in inequality? I hope you've enjoyed this video. If you have, please smash that like button, subscribe if you haven't already, share these videos around, and I'll talk to you again soon. Cheers.